Good day, subscribers, and welcome back to the Contrarian, everybody. Now, today I'll be talking about the bond market again. I know I put out a video about a month ago on the bond market, effectively saying that it was a great opportunity looking at previous bottoms in the bond market to get in, not financial advice related, and this video is not either, but a month ago I was saying that just looking at bond prices, where bond yields were then in relation to inflation, and the fact that inflation has been decelerating, it's just a good opportunity to consider adding bonds to one's portfolio. And I know that sounds strange from someone like me. Kind of this channel became more widespread because of something like GameStop that I was early in on, and something like gold and silver that I've been on now for the last couple of years. Again, it's kind of different than the bond market, so it's unique. I didn't ever really think I'd be saying this about the bond market, because it's just usually it's seen as a boring market that kind of old dinosaur type investors are a part of. But it can be great to do trading in the bond market, and it can actually have pretty dramatic moves at times. For example, if you had gone short the bond market starting beginning of 2022 and got out just recently, I mean, that would have been a tremendous position to have been short bond prices when they fell some 50% or so, depending on what you look at on the yield curve. But going short bonds would have been a tremendous trade to do then, and arguably going long bonds anywhere around now could do well in the coming year, depending on what inflation does in the coming months and in the coming year, and what the economy does. Does the economy decelerate? Does the Fed potentially have to reconsider their tightening program and go back to QE eventually? If so, the bond market could really rally strongly on that. But I did find a good article that kind of explained this well on Money Morning. I'll put the link in the description below so that you all can check this out for yourself. The title of it is Why You Need to Watch the Bond Market. And yeah, most people think that bonds are boring, and for the most part, they are right until they're not boring, which is the time to listen. During the 2007 and 2008 financial crisis, some of the most exciting trades came from the bond market. Now, why is this? First, the bond market is larger than the stock market. Second, the bond market is primarily made up of institutional money, not retail. And third, because of that institutional aspect, bond traders take a much longer view of the market forecast than stock traders. And it's interesting that they take this longer view, because in 2021, we saw a rollover in the bond market beginning in July, 6 months ahead of the S&P 500's top at the end of the year. So just 1 month ahead of the stock market's failure, the bond market started its precipitous drop. For those watching, those two moves tipped the stock market's hand for the bear market that was inevitable. Today, he's saying we're facing a mirror image as bonds are once again revving up for a bull market move. In October, just ahead of stocks, shares of the TLT ETF formed a technical bottom as the first signs of buying strength formed a trend. And then you saw names like Bill Gross, Jeff Gundlach, of course, kind of throwing their hats in the ring saying, this is the bottom. And it does take a lot for them to put their names on the line. I'll also point out, this guy isn't mentioning Bill Ackman, but Bill Ackman actually was short the bond market for a couple months prior to this bottom, and then he did get out pretty close to the bottom. I mean, it was within a day or two of the actual bottom that occurred. So looking at this chart, he's saying that TLT is only 5% now from a critical technical level, and that is the $100 price level on this ETF. Markets love round numbers, and the more zeros, the better. They're considered heavy psychological triggers. So he says once TLT moves once it moved below the $100 price in July of this year, shares tumbled pretty quickly. So it got under that level, it fell pretty quickly to around 82, 83, a low of that, which is pretty dramatic in the bond market to see a move like that. He's saying that should we move above $100, we'll also break out of TLT's 20-month moving average, and this is also an important trend line that momentum traders, technical analysis traders are paying attention to. Um, I'll also point out he doesn't mention this, but um, just looking at what inflation expectations and what inflation might come in at, all indications from what I can see do point to continued lower inflation numbers in coming months. Just looking at something like Trueflation, which actually front ran the run up in CPI and has been front running the decline in CPI. That is also showing that inflation, CPI, the official inflation numbers that come out, are likely to continue to trend down. Um, but this guy is saying this tectonic shift in the bond market, should it happen, will trigger another wave of buying power into the stock market that could start 2024 out to be the best footing it's had in years. So not only could this be a bull market in the bond market, but actually it would benefit the stock market, of course, because as the Fed said, the bond market did a lot of the tightening for the Fed in recent months when rates went up to almost 5% on the 10-year bond. The yield curve became less inverted at that point, and now with longer yields declining again, it does actually have somewhat of an easing effect on the stock market. And so companies are now not having to pay as much interest as they were previously, and it does tend to correlate with benefiting the stock market as well as the bond market. So that is big news as well. Should the bond market effectively do an easing policy instead of the Fed, that might have an equal impact, or similar impact on the stock market, actually beginning to kickstart another rally. So obviously, if you wanted to play this more aggressively, there are leveraged ETFs you could do. There's options you could do. I haven't done any of that myself. I'm obviously not providing advice either way or in any direction on this channel, but I do think it's important to point out that just looking a few weeks ago, the bond market may have, and I would say did form, a important bottom in bond prices and an important top in yields that into the coming year is likely, maybe going to accelerate. You could see yields come down maybe more dramatically than what people are thinking right now. This, of course, would lower something like mortgage rates again. You might see housing prices begin to rise again on the back of that in some markets, obviously not all of them. And then, of course, in the stock market, you could really see this begin to heat up as people almost begin to front run the easing that the bond market is doing. Maybe they anticipate the Fed is going to have to begin easing as well, cutting rates. Obviously, the Fed doesn't have to follow the bond market, but maybe they do. And of course, this might all be accelerated if the economy itself does begin to decelerate more, if job numbers continue to come in worse than what people are expecting, kind of like the last couple days. Stocks have kind of treaded water on that, but at other times, the stock market has actually rallied on bad economic news, because in the market's mind, it's almost like bad news could be good news, because it's almost signifying an end of the Fed's tightening cycle, which the market's almost been pre-programmed to think at this point. But all this being said, this none of this is to be taken as advice. Just very interesting to see that the bond market might actually be signaling that an upcoming rally in stocks might be expected for the coming year. So all that being said, I would love to know what all of you think about this bond market, stock market, everything else like that I mentioned. I'd love to hear all of your comments in the comment section below. If you like the video, just give it a thumbs up, consider subscribing, and hope to see all of you again at some point.